the entire equity market. Joining me now to discuss, Aaron Gibbs and Mitch Rochelle. And Aaron, the bond yield rally crashed through all kinds of support points, right? I mean, I remember when it was going to go to 275 and 3, and a lot of people were thinking 3.5 by the end of the year. It feels like, at least at one point this morning, like we could have got there by Friday. Yeah. What do you make? Could it be overbought, at least short term? I mean, not overbought, bonds themselves being oversold, the yield up too much.
Right. So the prices just, they really dropped last week. I mean, there was a massive sell-off in bonds pushing those yields higher. I think breaking through that 3% hurdle, and that happened on the 5-year, it happened on the 10, that was really big to break through the 3% hurdle. And so I think there just needs to be some consolidation, some stabilization. It may be very short-lived. I mean, we might be talking 2 days before it pushes back up. But I think,
would it come back down and test something like a 3 or 275 or something like that?
Yeah, and I think, obviously the shorter term are a little more volatile, but we're just so out there on what is the Fed going to do, and everybody's sort of guessing. And I think, coming up to that CPI report too, we might see that it come down as people go into bonds, pushing those bond prices back.
And to that point, Mitch, David Tepper, one of the most powerful guys in the street, was really angry. He said taking the option of 75 basis points off the table was an unforced error by the Fed. He also said the Bank of England made a similar mistake the next day. It is interesting because those two actions coincided with a massive sell-off in the market. Is he right?
I think there was a great opportunity to do 75 basis points because it was half baked into the market. And then look what you saw. You saw a whipsaw when people digested the fact that they weren't doing 75 basis points, and then the next day when they thought about it. Here's the thing. Chairman Powell talked about market conditions and keeping an eye on market conditions. I think that's something that a lot of investors are taking some solace in, because the market that we're going to look at is the bond market, what we've just been talking about. They have to unwind $3 trillion potentially of balance sheet, which means if the Fed's not buying those at auction, who is and at what price? And I think we could see a scenario where, yes, they let some short-term stuff mature and they don't rebuy it. But I think the Fed's going to start coming back in and bidding in some of those auctions. I think they may not have a choice at some point, because we could see a complete washout. Look what happened in just a few days with the uncertainty of knowing whether or not the Fed was bidding. So, listen, I like to call things just so you can pull the tape a couple of years later if I'm right.
But a couple of years? I'll see you in 2 weeks. All right. So let's talk about the CPI a little bit more. The Manheim used vehicle index came down again, the third consecutive month that it's come down. It's not a lot, but it's still obviously up. This is one of the bigger drivers of at least the goods part of inflation. Does that make you feel better? And if so, are you buying anything, Aaron?
I'm not buying right now just because there's so much fear in the market. One of the things I like to look at for how much fear is the VIX, and for 8 out of the past trading days, it's been above 30, so in the super fear range.
Right.
So I don't like to make a lot of bets when we're just in such a panic mode. I'd like to see some stabilization. I think that, just every number right now is read as a negative. Even if we get the best positive news, somehow there's just so much negative
So all news
sentiment.
is bad news at the moment.
I feel like all news is somehow being interpreted as bad.
Mitch, I wanted to get